Hello, I'm Irwin Stelzer, Director of Economic Policy Studies at the Hudson Institute. And I'd like to spend a few minutes with you just thinking through what Secretary of the Treasury Geithner is proposing as a regulatory scheme for the financial services industry. Now, you know, Mr. Geithner specializes in broad outlines of what he's going to do with the details to follow. So I think we have to be careful. But nevertheless, there's a lot to play for here. And I think that the liberal tendency to just regulate anything that moves and the conservative tendency to be against any form of regulation are not acceptable alternatives. So let's decide what it is we want to do. First, we do know now, as a consequence of recent experience, that there is a shadow banking system out there somewhere which does take measures that threaten the entire financial system. So they have to be brought under some sort of regulatory control. Second, we do know that there are a lot of non-transparent transactions going on which affect not only the buyer and the seller involved in those transactions, but a lot of people who've never heard of Lehman Brothers who are now losing their houses because Lehman Brothers went down. They have a stake in this as well. And third, I think we have to keep in mind that there is international competition out there, that we can't just regulate to our heart's content because people, especially the people involved in financial services, are extraordinarily mobile, and they can take their brains and their money somewhere else. So those are the constraints on what we can do. But there are certain things that must be done, it seems to me, and that we have to work out the best way of doing them. First of all, we have to have some mechanism whereby shadow banks that might fail and cause havoc can have an insurance system, rather like the FDIC, where they can be essentially taken over in an orderly fashion by the government. Now, second, that means, however, that we don't want to politicize that process by giving that power to the Treasury, which is the same thing as giving it to the President, but that we want to keep it in an independent regulatory agency. And I think finally we have to try to work out regulatory systems that avoid hordes of risk-averse bureaucrats descending on risk-taking, innovative entrepreneurs. Instead, we have to get the interests of the players aligned with the public interest. A good example, people writing mortgages, for example, should have to have some skin in the game, keep a piece of the mortgage so that they care about the risk of the mortgages they are writing. That sort of thing. I think if we think through and avoid the twin perils of excessive regulation and doing nothing is not going to be an option with this president and this government, we should be able to come up with sensible schemes, but we will never eliminate fraud. There will be, I guarantee those of you who are younger than me watching this, that there will be another Bernie Madoff in your lifetime, no matter what we do with the new regulatory regime. Thank you very much.